So I'm going to go ahead and share my slideshow with you guys. So just to let you know, this is being recorded and the slides will be provided. So we're about to learn a large amount of information in about an hour. It's not enough time to go to every question and every detail. So if you have follow-up questions or you want individual advising, please feel free to follow up with me afterwards. So I just wanted to highlight Maria's chamber, the Chamber of Commerce, Greenwich Village, Chelsea. We really, if this is the first time you're joining us for a program, we really hope that you'll join. We're trying to grow our membership base, and we really do help businesses not just right in Chelsea, but all over the New York area. And so even if you're not right in Chelsea, please feel free to join us. We even have online events, so you get something out of it for this year. This is a little bit about me. So I've been a New York attorney for over 10 years. And I obviously help people with their PPP applications. And I also focus in the employer side of things, so employee handbooks. If you're just starting a business or you're starting a new business, I focus on contracts. I also file trademarks and website terms and conditions. Let me get this thing. Okay. Just to let you know, we have a special offer for attending, offering a 1-hour reduced rate advising session. So if you do have follow-up questions or you really want to get into your own details, that might be a really good opportunity for you. All right, so without further ado, we'll get started. So PPP round 2, this is our agenda. It's very aggressive. We're going to talk about who is eligible, how much you can get, what you can spend it on, how the penalties apply, and how the new rules interact with EIDL. Then we're going to get into the forgiveness applications for round 1, when to apply, how to apply, and how much can be forgiven. So I know people have a mix of interest in both of these topics. So we're going to try to get through everything. And then if you have follow-up questions, like I said, we can talk about that. So this is a history of the Paycheck Protection Program. It was created in March, came out of the CARES Act. And as you guys probably know, the first round ended in August, which meant after that you couldn't apply anymore. So then there were some changes to how the PPP program was able to be utilized in June 5th. So we'll highlight them a little bit to make sure everybody's all caught up. And then we'll talk about the new changes. So the recent law that came out, it's a boring name, Consolidated Appropriations Act of 2021, includes round 2 of PPP. It reauthorized it, has all the information on the program, and this is how much it was refunded by: 284.45 billion to PPP alone and 20 billion to EIDL. Just to let you know, the PPP second round draw technically ends March 31st, but just like last time, it's first come, first serve. So if you want to get in on round 2, don't drag your feet. Okay, so what are the loan terms? This is the PPP loans in general. They're calling it a second draw. It's still the same loan terms. So it's an interest rate is 1%. What does this mean? If you have to repay any portion of it, which we'll talk about, then it's only at a 1% interest rate. You pretty much cannot beat that. The maturity date and repayment period is 5 years. So you have 5 years from when the clock starts to repay whatever amount's not forgiven. And there is a deferral period. So you don't have to start making any payments if you have to make any until after it's determined what amount is not forgiven. And that's when you have to start the payments. If you don't get any of it forgiven, the payments have to start at least 10 months from the end of your covered period, which we'll discuss. Okay, so I want to highlight some of the biggest news at the front in case some people don't make it to the end of the presentation or have to go. So one of the biggest things that's happened is that the EIDL advance no longer reduces the forgiveness amount of your PPP loan. And this applies to both the first draw and the second draw. So what does that mean? EIDL is a loan program. It's not a forgiveness program. It's a loan only that pretty much any small business can apply for from the SBA, but you have to pay it back. And the way that you have to have been down a substantial amount related to COVID. So if you qualified for EIDL in the past and you got an EIDL advance of up to $10,000 they were giving out, it would have reduced your PPP loan forgiveness amount by that amount. So even though you might have got 20,000 in PPP, only 10,000 of your PPP could be forgiven because you had gotten an EIDL advance, which was basically a grant. So now they're saying, never mind, we're not going to make EIDL have anything to do with PPP. So now, if you get the EIDL advance, which is back open, by the way, it's not going to affect your PPP. So it's a big deal for people that got that advance because it means you just made back that amount of money. You don't have to repay that amount. So if this affects you, if you have an EIDL advance already, talk to your banker because odds are you're going to be able to amend your application so that you don't have to pay back as much PPP. It's huge if you're in that position. So all I can say is follow up with your bank on that one if that. All right, so loan forgiveness. I want to talk about loan forgiveness from round 1 and round 2. We're going to get into more of it later, but these are the big things, and I want to highlight it up front so that, if anybody doesn't make it to the end, they got this. So they have simplified the round 1 loan forgiveness application, and this carries over to round 2. For loans up to $150,000. So if you got round 1 PPP up to $150,000, there's going to be putting out a 1-page application, forgiveness application. And all you have to do is affirm that you met basically the qualifications of the PPP program and basically state and calculate yourself how much of your loan is forgiven and if any isn't. So we'll get into all that later, but that they simplified the application is huge because it used to be extremely complicated. The problem is the complication is really not removed because now you still need to do all the calculations and keep that information in case you're audited. So we're going to go into this in more detail, but I just wanted to highlight that they've changed it and made it a little bit more simpler. So if you were working on a loan forgiveness application, I would just stop and wait for the new 1-pager to get sent to you by your bank so that it's not as complicated. Okay, who's eligible for round 2? So now we're going to talk about round 2. So first I want to say that you have to have spent or will spend all of your round 1 PPP money to be eligible for round 2. So I'm getting questions, who can apply for round 2? If you still have PPP round 1 money, then you need to basically get rid of it or earmark it in a way that you're allowed to use it so that it'll get forgiven, so that you can affirm that you've either spent or will spend all of your round 1 money before you get that second round money. So as long as you can affirm that, then you can apply. Most people have probably long spent their PPP round 1, but not everybody. You have to have been in operation since February 15, 2020. So a brand new company, this is not for you. You can't have more than 300 employees, and there's a whole realm of law getting into affiliations and how that's counted. If that's you, then follow up. But for this presentation, we're just going to, focus on the smaller size businesses. Okay, so these are the two major qualifications. So you have to have been down 25% in one of the 4 quarters of 2020, and you have to be able to prove it through your books. And you have to affirm this to qualify for a second draw. So this isn't everybody that got the first draw, because the first draw didn't have these kind of qualifications. It was pretty much a free-for-all. Now they're saying, no. It's only for people who can show that they were basically affected by the year by COVID. And so they actually came out with new guidance last night, the SBA, that actually says if your annual receipts are down 25% from the year before, so somehow it doesn't work, a quarter is not working out for you, but your annual receipts are down 25%, they'll also accept that. And so the next question that gets spawned out of this, I had it myself, is what are they considering gross receipts? What's the definition? So they actually came out with some guidance on that. Let me see if I put it in here. Hold on a second. Okay, here it is. All right, so gross receipts. They just came out with the definition. Oh, sorry. Okay. So first of all, if you do your books on a cash basis accounting, generally that means when somebody actually pays you and you actually get the money in, that's what they generally refer to as a receipt, right? So you literally have the money in the door. That is going to be fine. If you can show your 25% down based on that type of accounting, you're good. The second question is, what if you can't show that, but you could show that your accrued receivables are down, meaning let's say you did a lot less work in Q1, like you didn't do any work at all because of COVID for some reason. Well, in Q1, you still got all the receipts from the work that you did the quarter before. So it doesn't look like you're down at all. Well, it's possible that you could use the accrual basis accounting method to prove that you're down because the SBA specifically came out and said that receipts means all revenue in whatever form, note this, received or accrued. And that accrued is a big word because there's a big difference. So you either received it or you accrued it. So what does accrued mean? Generally, that means you did the work and now you sent out an invoice. They didn't pay it yet, maybe they did, but that's the debt has been accrued by them. So in my opinion, if you can only show the 25% decline through a decline in using accrued accounting, from this definition, I think you can still apply. I would say talk to your accountant, make sure they agree. Talk to your bank, make sure they're okay with that. You're on the cusp because in a way, if your next quarter, your receipts, came in high, then, you may not be the person who this loan is for, but in all technicality, it looks like you can do it with accrued accounting. So I know that was a big question. Many people are going to hit that barrier. So that's what they came out with. All right, so this is another major thing to consider. You have to affirm, now we had to affirm this the first round too, that current economic uncertainty makes the loan request necessary to support the ongoing operations of the applicant. Now, this might have been, something you could have affirmed in March or April because everything was very uncertain. Now that different things have kind of come to pass, you have to ask yourself, is my business look like it's in the position where we actually need this money in order to keep operating? And if you say, not really, then you may not want to apply for this because this affirmation, it's something that you could get audited on. But I have to say, if you can technically qualify, it's going to be hard for somebody to argue with you about what you felt is necessary. So it might be more of a moral dilemma than anything else. But just remember, there are people out there who really need the money. So if you don't really feel like you can make this affirmation, I would encourage you not to apply for round 2. Let the people who really need it get it. Okay. All right. So those are the major things to know. So what business types can get this? It's the same business types for the most part that could get round 1 with a couple exceptions. And so I know a lot of the major questions, can I get it if I'm self-employed? Yes. Sole proprietor, independent contractor, yes, yes. LLC, S Corp, C Corp, yes, yes, yes. Not for profit, most of them. Housing cooperative, veterans organization, tribal business concern, agricultural cooperative. All right. So this is just a kind of something you might want to share with your organizations. 501c6s now can apply. They weren't eligible previously, and it's because of lobbying efforts. So they were very hesitant to give out money to any kind of group that does lobbying because, whether you're for them or against them, the government should be giving them the money. Now they've kind of dialed it back and they realize, a lot of these organizations are doing a whole lot more than lobbying. So as long as this organization doesn't receive more than 15% of its receipts or 15% of its activities not devoted to lobbying, then they're going to let the 501c6 organization apply. So it can't be organized for profit, and it can't be benefiting anyone's shareholder. It should be regular not-for-profit. So that's exciting. So you might want to share that with any of these types of businesses or boards that you're on and see if they can get some money, because I'm sure they need it. Okay, also newly eligible is people that are in bankruptcy. So what does it mean? When you go into bankruptcy, the bankruptcy trustee is in charge of the entire what's called bankruptcy estate. And so generally, they weren't allowed to get any PPP money, but now they are. And so that means the trustee of a bankrupt estate can ask the court, and if the court allows it, the trustee can apply for PPP for the business. So some businesses can be in what's called Chapter 11, which is they're not formally completely out of business. They're reorganizing and they're working with the bankruptcy court to get their creditors to agree to a plan with them. So the PPP is going to be huge for them. It's going to help them reorganize. It may be the difference of whether they went fully bankrupt or can hang on. So if you're working with a bankruptcy trustee and you're trying to come up with a plan, you want to make sure you're looking out for yourself and contacting your trustee and making sure they ask the court to apply, because there's only a 3-month window. The bankruptcy court moves slowly. I mean, you should email them today if you know your bankruptcy trustee's email. Okay, so that was for the new people. Sorry, I'm gonna try to keep an eye on the time. Okay. All right, so we went over what kind of accounting could be used. So what kind of proof do you need? Okay, so at the time of application, you have to attest that you meet the eligibility requirements. And upon forgiveness, you may need to produce documentation that shows you met the standard. So what does that mean? It could be that when you fill out the application, if they streamline it, they may not make you prove your revenue loss, but at some point you're going to have to. So if you don't have the revenue loss to apply for round 2, I wouldn't risk it. Who isn't eligible for round 2? It's really the same people who weren't eligible for round 1. And so I have a long list of companies here. It's pretty specific. It's generally anybody involved with banking or money lending. But what's new is that now they're looking at businesses that are created in China or have significant operations in China or Hong Kong, or owners that own more than 20%. So if you're in a business that has an affiliation or has, Chinese ownership, you want to just check your percentages before you apply, because, that's a new thing. So that's only going to apply to some people. Okay. When should you apply? You got to apply ASAP. It's still first come, first serve. Get it before the money runs out. So don't wait. The SBA put out rules last night. The banks are going to follow those rules and start making their applications. There are banks that already have pre-applications. If your bank sends you a pre-application, fill it out. What bank can you apply to? So if you got a PPP loan already and you had a good experience with that bank, then you might want to go back to them. If you didn't, just know that you're not stuck with that bank. You can go to a different bank. And one of the banks that I really recommend is Cross River. They don't get anything from me publicizing them, but I've had a lot of success with them. And they're really after your business. So if are worried that your small bank isn't going to get it together, you might want to hop over to Cross River or any of these other banks that you can find that are a little bit bigger and have really been helping people with these loans. Cross River is the one that I've used that I could recommend, but it's not the only one out there. But I just want to let you know, if you are sitting around waiting for your bank to get it together, I would say go with somebody who's ready to go, because the money will run out and you might get stuck. How much can you borrow? All right, major question. You can borrow similar to last time, with two exceptions that I'm going to talk about next, but generally most businesses, you get 2.5 times the average total monthly payment that you put out for payroll costs. And then it's during these periods. So basically, how do you figure out the total monthly payroll costs? You have to start with a time period. So you can either use the 1-year period before the date the loan's made, or calendar year 2019. So what does that mean? If you're gonna have a stellar January 2021, your average monthly payroll costs might go up. So you're trying to maximize your total monthly payroll cost to get the most you can. So a reason to maybe, wait and use the 1-year period before would be if you're doing great in 2021. Otherwise, calendar year 2019 is easy because your bank may already have this information from round 1. So you may not even have to give them anything else. And it's you've got your tax return on it. You've got your documents for it. Now, maybe 2020 you put out more payroll. So then you're going to want to use the year before. So you just get to pick the year. You want to use the year that's going to maximize. So basically you just take all your payroll you put out in that time period and you divide it on up by 12, and then you multiply that by 2.5, and that's how much you can borrow. And it's capped at 2 million. So that's the cap. Okay, so there's 2 exceptions to this. The first we'll talk about is the seasonal employer. If you're a seasonal employer, there's it's still 2.5 times the total monthly payroll, but you get to calculate it differently. That's because if you use the whole year, you got 4 or 5 months of zero payroll, and then 6 or 7 months of higher payroll, and the zero payroll months are going to cut down your average, and you're not going to be able to borrow as much, and they recognize that. So if you're a seasonal employer, this is the calculation that's going to work for you. Basically, you just get to use a 7-month time period to figure out or a 6-month time period to figure out what your total is going to be. So I'm not going to go into it, but if that's you, you can come look at this slide and learn more about it. All right, this is the major news. Restaurants and hotel industry, basically anyone that has an NAICS code of 72 can borrow more than everybody else. And this is because they were hard hit. They can get 3.5 times their average total monthly payroll costs. Same calculations, just a higher multiplier. So they can literally borrow more than the rest of us, but I'm not mad at them. If you're not sure if you're in that industry, just Google NAICS code 72. This is one outline of the 72 industry codes. But there are some that might get even more specific. So I would say use this as, a marker, but also research if you think you're on the edge of one of these to fit into this category. Okay, so that's the major news. So now we're going to get into a little bit of the nitty grittier stuff on figuring out what you can borrow and how to do it. So what counts as payroll costs? So this hasn't changed. So if you already had PPP, you're used to this. This is pretty much the same as before. So when you calculate the payroll costs, like we said, you pick your 1 year that you're going to use. And generally you can use how much you paid out, but there's a caveat, and that is you can't count more than 100,000 per person. So in the industries that have higher paid employees, you have to cap their amount per employee at 100,000. So what's that going to do? It's going to drive down your total payroll costs that you can use. So I want to point that out. Then on the other hand, payment for cash tips that generally wouldn't, maybe show up, you can count toward the payroll. So that's going to make your total payroll go up. And then you want to remember that you can count payment for plans that the employer pays. So these are employer payments. So employee vacation, medical leave plans, and sick leave. Now, if they already counted as salary, you can't double count it, but you can count those. And this is continuation. You can count money the employer paid during the year for dismissal or separation payment for group healthcare benefits, retirement benefits, disability plans, life insurance. These are employer payments. And another one people don't forget, the state or local tax assessed on the employee compensation that the employer pays out, not federal, but state and local, you can add that. So basically you want to do all these calculations to get to the maximum allowable total and then divide that by 12 times 2.5 or whatever your multiplier is. Okay, so this is a big question for round one. If you don't remember, people were saying, well, I pay independent contractors. I don't have W-2s. So do my payments to those contractors count as payroll? And the definitive answer is no, they do not. So independent contractors, if you have them, even if they're just individuals, can go and get their own PPP loan in their own name, which we'll talk about. So because of that, they're not letting the people that pay them use those payments to get to kind of enhance. So if you have independent contractors, that doesn't mean you can't apply for PPP. It just means you can't use the payments you give those contractors to up the amount that you can get. So if you have a question about that, you can follow up. Okay, so how does a sole proprietor determine their payroll? They're going to do just like the business, but they're just going to look at how much net earnings they brought in. So basically, a sole proprietor is considered as paying themselves what's left over after their business expenses. So it's going to be pretty much what you're showing on your tax return. So when you pay taxes, you're saying, I made this much gross and I had this many deductions and I'm down to this much is my net earnings. So those net earnings are what you can use, divide by 12, and that's how much times 2.5, that's how much the sole proprietor can borrow. So if you have a lot of expenses and you don't have that much left at the end of the year, that hurts you because you can't borrow as much. And so it's, beneficial to some and not to others. All right, how do you calculate average month of payroll? So we talked about this before. It's either the 1 year before the date on which the loan was made or calendar year 2019. So you add up all those payrolls that we talked about and then divide by 12. So what I would just recommend is do both, see what you come out with as the most that you can get. So now we're going to talk about the covered period. So this means when you get the loan, just like in round one, you have to use the loan proceeds in order to get the loan forgiven. You use these loan proceeds on certain approved categories. So first of all, I want to emphasize that you don't have to use the money for any of these categories. But if you don't, you can't get it forgiven, and it's a 1% loan. If that's how you want to use it, that's okay. Forgiveness may not be your goal. So just remember that. If every dollar isn't forgiven, that might not be the end of the world for you. It still might be an excellent opportunity to get help for your business. All right, so the covered period is talking about the forgiveness part of the loan. It means you have to use up all these loan funds within this time period. And if you don't, basically you can't get that amount forgiven. So originally it was an 8-week period, which was like a scramble to get rid of the money. And that didn't work out. So what they did is they changed it to 24 weeks, which is 3 times the original time period. You now had 24 weeks from when you got the loan or close to it to use the funds. So now they're oddly keeping the choice. So for round 2, it's going to be the same. You can choose to use the money basically in any time period you want, but the maximum time period is 24 weeks. And it starts when you receive the money. So you can use it all up in 10 weeks, 20 weeks, but the max you have is 24 weeks. You're not going to have to declare when you get the loan. So generally, this is a decision you'll make on the back end. Okay, when we're talking about forgiveness, at least 60% of what you borrow has to be used on payroll. If you don't use 60% on payroll, then it's going to reduce your forgiveness amount. So like I told you, it's not the end of the world if you can't use 60% on payroll. Your payroll got diminished. You only have one person left to pay. You're not going to hit it. It's not the end of the world. You're just not going to be able to get as much forgiveness, but it's still an excellent loan opportunity. But this is a payroll protection program, right? So the point of it was to get employers money to cover payroll to try to help them keep employees. That was the point. So that's where that's coming from. Then the other 40% to get forgiven needs to be used on allowable items. Okay, so like we said, this is talking about forgiveness. So we talked about payroll. These are the other categories you can use it in. So remember that healthcare benefits, paid sick leave, family leave, insurance premiums, things that the employer is paying out of pocket to benefit the employees, count as the definition of payroll. So it's not just limited to the payment you literally make to the people. So that can up how much you used on actual payroll. And then we're getting into the non-payroll. So then interest on a mortgage, your full rent payment, not a real estate property payment, just a rent payment. All the utilities for your business, interest on debt obligations for the business incurred before basically coronavirus started. And now we're going to get into 4 new ways you can use it, which just means it's easier to get rid of the money. Covered operations expenditure. So this is new. This isn't from before. So payment for business software or cloud computing service software, for payment processing, product delivery, facilitating business operations, HR, sales and billing, supplies, inventory. What came to my mind is QuickBooks, Salesforce, your internal, inventory tracking systems. I don't know all those names for the different types of companies we have out there, but basically any kind of software you're using to run the company, you can use the PPP money on for that 40%. Now, this one's really interesting. if your property was damaged during 2020 related to any kind of vandalism or looting, public disturbance, and that wasn't covered by insurance. So now a lot of people's damage was covered by insurance. So likely this could be the premium you had to pay, the deductible. Or if you didn't go through insurance, you're allowed to use PPP money on that. So that's great. And then another one is a big one, the covered worker protection expenditures. So this means you can use PPP money on those purchases you made to protect your business from coronavirus spread. So PPE, if you had to get new ventilation, indoor, outdoor expansion, basically anything that was done for the good of helping protect coronavirus, you can use for that PPP 40%. And another new one is covered supplier costs. So for supplies that are essential to the operations of the business, that you already had a contract for before you got the loan, and or respective perishable goods. So what does that mean? You can now use the PPP funds on your supplier contracts, because that's an essential part of your business. Like, why can you pay your rent, but you can't pay your supplier? It didn't make any sense. So now they're like, okay, fine, you can pay your supplier too. I mean, you really can't figure out. So they fix that. So these are ways to get rid of the money. So it's going to be easier to get rid of the money, right? It's not just payroll. And I think that's really going to help people who don't have as big a payroll staff. Other people, you can put 100% of the PPP times 5 toward payroll and you'd not be there. So, they don't have any problem quote getting rid of the money. So let's see here. Okay. I want to get into the penalty provisions. Oh, great. Okay. So we're there. So we made it. All right. So the major thing to understand with the PPP money is that the point of it was to encourage employee retention and prevent diminishment of payments to employees, even if they were retained. And so even though they gave you this money, they were going to reduce the forgiveness amount, which means if it's not forgiven, you have to pay it back at 1% in 5 years, for people who couldn't retain the employee. So basically, it's harsh, because if you made your best effort, but you lost the employee anyway because you couldn't keep them, it would affect your PPP. So there's actually a silver lining. So don't get too crazy over the reduction part. But I want to go through the reductions first for people who they apply to, and then we'll talk about the safe harbors. So just keep in mind, you might fit a safe harbor. So even if this seems like right now it applies to you, we're going to talk about a safe harbor, which might fix it. Okay, so don't freak out. But if the safe harbor doesn't apply, I just want you to understand how the reductions work. So what you're doing is they're looking at the average number of full-time equivalent employees during the covered period. So that means the covered period is when you're using the loan funds. So let's just say we got the loan funds today and we use them over the next 24 weeks. We're going to look at what is the average of the full-time employees I keep during this loan period. And so let's say I used to have 10 employees and I just got rid of 5 of them. So my average is just going to be 5 full-time employees over the covered period. So you take that amount, and we can talk more about how to calculate that because it can get complicated, but we're using an easy example. And then you divide that by the average number of full-time employees you had basically before coronavirus. So as far as I know, they have not changed this calculation method, which I think is interesting. But basically they're saying, okay, you can either use the full-time equivalent average of employees you had January and February of 2020, or the average number of full-time people you have between February 15, 2019 and June 30, 2019, because these were the original time periods before that was equivalent for coronavirus. So basically you were taking the average number of employees you had before coronavirus. So let's just say I had 10. I had 10 back in January and February 2020, and then coronavirus. If I only have 5 during the covered period, you do 5 divided by 10 and you would have 50%. So what does that mean? Even though I might have borrowed $50,000, I would only be able to get $25,000 forgiven. And the penalty, the point of the penalty was to say, like, we gave you this money for free so that you could keep your employees. And now you've gone and got rid of them. So you're not getting this money for free. So I don't think that this base calculation is going to work for the new one. So they might come out with something different. But the general idea is you don't want to reduce your workforce. They were going to penalize you. So then it came out to, well, how do you calculate what's a full-time equivalent employee? So basically they came out and said that's 40 hours a week. So if you had 2 part-time employees and they each work 20 hours a week, they would make 1 full-time equivalent person. And so this question a lot, what if I laid off 3 people and I rehired 3 totally new people to do something different? Has my full-time equivalence employee calculation changed? And the answer is no, because they're only looking at the hours. So if you had 3 employees working 40 hours, and by the time you get to the end of the covered period, you hire them back and you have 3 employees working 40 hours, then your full-time equivalency hasn't changed. So it doesn't matter about the person. It doesn't matter what they were doing. It just matters how many hours they're working. So if you get rid of 1 40-hour person and you hire 220, you're back to 0. You're good. But if you have more questions on that, we can get into it. There's so much here. We don't have that much time left. This went really fast. So this was an example, is a similar example to what I did. So there's another reduction amount. Now this had to do with reducing an employee's amount of pay. So let's say you kept everybody, but you reduced everybody's pay by 30%. They would penalize you by the amount of percent over 25 that the employee got reduced. So if you kept somebody and their salary was reduced by 30%, they would only penalize you 5% because 25% was allowable. But once you dip them under 30% of what they used to make, they're like, okay, you might not have cut anybody, but you made the cuts within, you just dropped everybody. And they're like, no. The point was to keep everybody where they were. So that was another way that the penalty would kick in. So let me get into the safe harbors. Okay, so this came out around, I think, July or August. They decided that you will not have to worry about any penalty if you can say that the reason you didn't hire anybody back or hire everybody back is because you could not find similarly qualified people to fill the position, or another big one is you could not, you didn't have the ability to bring everybody back because of trying to comply with coronavirus rules such as social distancing. So for instance, if you were a restaurant and you used to have 50 staff members and you only brought back 10 and you said, well, we don't even have capacity to let 50 people in here. How could we have brought 50 back? It's not fair to penalize you. So if the reason has to do with the way your business has to protect from coronavirus, then you won't have to worry about the penalty. If you can't meet either of these safe harbor provisions, then you may be dealing with the penalty. So penalty just reduces how much you don't have to pay back. It's not the end of the world. It's a 1% loan. So yeah, you may have to pay a portion back, but it's still a lot better than nothing. So then we have a major question about rehiring to avoid reductions. And so this is really confusing for round one borrowers. Really what the law said is it really has to do with when you laid somebody off. So if you laid somebody off before April 26, 2020, which was a while ago, as long as you brought them back, or the equivalent of someone else back by the time that your original first covered period ended. So remember, that could have been either 8 or 24 weeks. Then if you brought them back, you wouldn't have any penalty. If instead you laid somebody off basically after that time period, just bringing them back doesn't really fix the penalty, because the penalty looks at how many people were you employing on average during the covered period. So the idea that you could just bring them back related to people who were laid off before the 26th. So in the original context, when we discussed this, it was before April 26th. After April 26th, it's different. So if you just lay people off in July and brought them back in October, that's going to result in a penalty, because it's going to lower your average full-time equivalent during the period. Now remember, either you could have put a safe harbor, so it might not matter, or it's not that big of a deal. Okay, you have to repay 10 or 20% of your free money. Not that bad a deal. If you need help figuring out how much you can be forgiven for, you got to follow up separately, because it's very, very, very dependent on your individual situation and exactly what happened. So one thing I want to caution everybody about is, when you're doing your forgiveness application, that's one page, and you're affirming that you followed everything, that's a major affirmation, because the government's now relying on you to do these penalty calculations and be honest about how much you're allowed to get forgiven. And so you're taking a risk if you willy-nilly just sign off and you're not really sure that you qualified completely for total forgiveness. So what I would say is look back through these slides, reach out, me or an accountant, any attorney that works in these fields are going to be slammed. We're here to help you. But if you do just affirm, oh yeah, everything's forgiven on that one page without the calculation, what can happen? You can get audited once everything calms down and the government's looking for money. They come around and audit you, and all of a sudden you weren't qualified for 100% forgiveness. You were qualified for 70% forgiveness. It's probably going to come back to you with penalties. So it's a risk you take if you're just going to willy-nilly affirm it. So I would encourage you to look at these and reach out. I know it's confusing, but that's the information. And we'll have these slides. You can go back and look at them. There's a lot of things on the internet once you Google the very specific questions. So I want to touch real quick. We'll get to some Q&A next. Real quick on the sole proprietor forgiveness. Like I said, if your loans after a certain period, which is I think begins around June or July, this is a first round loan. You can generally pick your covered period of either 8 weeks or 24 weeks from first round. And so if you're a sole proprietor, you should pick 24, because you get more money. It's a calculation. So in 8 weeks, you could get 8 weeks of your net profits forgiven. But in 24 weeks, you could get 2.5 months, which is basically 10 weeks of your um, amount forgiven. So that's going to be equal to how much you probably borrowed. It may be slightly less than how much you borrowed, but it's probably going to be equal to it. So if you're a sole proprietor and you have to pick your time period, 24 weeks is going to be better. 24 weeks is going to be better for most people because it's just a longer time to spend the money. There's no benefit that I know of picking the 8-week period. So just remember that if you're a sole proprietor. Now I got into some very specific rules for partnership. So we're kind of running out of time. If you're a partnership, look back at this, this screen. I'll talk real quick about EIDL's interaction with PPP. We talked at the beginning about the major change, which is that the advance doesn't reduce PPP. Another thing I want to emphasize is that the EIDL advance is reopened. What does it mean? EIDL is a type of loan program where you have to pay it back, but it's a very low interest rate, very friendly loan that the SBA is given because of coronavirus is considered a disaster. So when you apply for this, you can get up to $10,000 grant, meaning you don't have to pay it back. And so you have to have receipts at least down like 25% to even apply for EIDL. So, but if this is you and you are looking for money, you want to apply for EIDL soon because the advance is reopened, which is a grant. And it's up to $1,000 basically per employee. There's other ways to calculate the grant. So I would say work with the SBA. They decide how much your individual grant's going to be, but it's generally $1,000 per employee up to $10,000 maximum. This doesn't reduce your PPP, so now it's just more additional free money. So as long as you can qualify for an EIDL loan, you should probably apply for it. Also, this is mind-blowing. You can apply for EIDL loan, get the your grant money, however much you qualify for. And then when they give you the loan documents, you don't have to sign them. You can say, no, never mind. I don't want to accept it. And you keep the grant money. That's great. So there's almost no reason not to apply if you qualify because you don't have to take the money that they offer you. Or you can take less. They say, oh, we'll give you a loan, $60,000. You're like, I don't want to borrow $60,000. I want to borrow $10,000. That's okay. You could do that. So I don't know how to stress more that this is first come, first serve. If you seriously want EIDL grant money, you better start applying today. I'm not kidding. They're giving priority to people that already applied for EIDL. Now, EIDL is not out of money. It was just out of grant money, apparently. So, are you guaranteed to get that grant money? I guess not. It depends on how many people are before you in line. But all I can say is don't wait much longer to get in line or they're going to run out. So this is really a run for the hills type of moment for EIDL. So basically, if you already applied, they said they're going to give first priority to the low income applicants to support low income communities where their economic loss was greater than 30%, which I think is very fair because it's about saving businesses. It's not just about getting some free money. And then second priority is somebody who already applied and didn't get their grant money. So just want to explain that toward the end of EIDL grant first round, people were getting less than people who got the EIDL grant money at the beginning because they were getting low on funds. So they're saying you can come back if that was you and get more grant money if you feel like or you didn't get the amount of grant money you were qualified for. What they did was it used to be up to $10,000 per business. And then I think they dropped it to just $1,000 a business. We don't care what you do. And so it really wasn't fair, but they were out of money. So now they're saying, okay, you can come back. But the truth is, who knows how long this money will last? They're going to be overrun trying to give it out. And so you just got to get in there. So this is, I don't know how this got in there again. That's the same thing. So we were talking about changing your covered period. Do you want to change your covered period to 24 weeks? Generally, I say yes, because you have more time to use your money. The only drawback that I could think of is if you really need to lay people off after you're done with this money. If you use the 24-week period, they're looking at the whole 24 weeks you're counting as your covered period, and they're using that as to determine if you kept your employees the whole time. So maybe you could keep those employees for 8 weeks and then you had to get rid of them. You would have no penalty if you look at just those 8 weeks. But if you had to keep them 24 weeks, okay, now you've got, 8 weeks of no employee. That's going to severely hit you as a penalty. So if that's your situation, that's why I'm saying you really should talk to somebody if you're not sure what to do, because it seriously depends on your situation as to how it works for you. And so I'll go ahead and take some. We could open it up for questions, Maria. I just want to let people know that in the slide, I have some information on the forgiveness application. These were the applications before this law came out, and it's the ones that people over 150,000 have to use. Just remember the simplified version's coming out. So okay, we made it to the end. I can't believe it. So you want to open it up for questions, Maria?
Yeah, I'm going to read some of the questions that had been coming in throughout the presentation.
Okay.
And I had to pay attention to like the chat and a whole bunch of other things. So if you answered it already, just let me know.
Yeah, that's fine. We'll just review it. Yeah.
Okay, I'm going to start with the earliest question that we got during the presentation. Can you confirm that the application for the second PPP does not exist yet?
So the SBA came out with rules yesterday in the evening, but there was no application on that page. The application itself, even once the SBA posts it, is just going to be an example, because it's going to be your bank that you apply with, and the bank gets the form from the SBA, and then they make it whatever way they want to do it. So Cross River Bank, for example, has a pre-application open. I feel like they should pay me, but I trust that bank. They've came through for me with multiple clients. They have a pre-application process open. So if the second apparently that you can apply, across River or other banks that have pre-application, or if you got something from the bank you already have PPP, I think Chase may have sent something out about round 2. You want to be poised. Don't be too crazy. They really gave a lot of money toward this program because they know how fast it ran out first time. So I really think if you apply within the next week or 2 weeks, you're highly likely to get your money. I mean, that being said, I wouldn't wait longer than that. Obviously, the earlier the better, but you don't have to be the very first one. I would say if you don't hear from your bank by the end of the week, maybe look into one of these other banks where they're taking pre-applications if you're getting antsy.
Okay. I have like 6 more questions.
Okay, that's fine. That's fine.
Is the second loan start period date incurred expenses after our first covered period?
Yes. So that's a great question. The covered period for each round of the loan is different. So the first round covered period started pretty much the day that you got that loan. There's also an option to pick the start date as like your the very first payroll period after you get the loan. They did that to be nice so that you're not like off trying to figure out like third of a payroll period. But basically it starts right after you get the loan. And then it's either 8 weeks, 24 weeks for round one. For round two, they're saying you can pick. It could be 8, 10, but whatever time period you have that you're using those PPP funds, that's the time period that you have to keep an eye on not getting rid of people, not reducing their salaries too much. But it's going to be different because your second covered period is going to start when you get the second round of PPP funding, which let's just say it's February 1, 2021. So your second covered period is going to start when your second draw starts.
Next question. Which specific records do you need to show the SBA to demonstrate the reduction of sales? Bank statements or what?
Oh, that's a great question. So there at the end of each quarter, you have something called a 941 that you report for your employees. So for determining your how much you can borrow, you want to look at your 940 or your 941. For determining how much you went down, you want to look at the same numbers you're using to report your estimated tax payments. So every quarter, you may make estimated tax payments on your income. It's you don't want the numbers to be too different, right? So you don't make two like completely different representations to the government. So you want to use, if you have an accounting system, it would be your books, and then let's say you get audited and they want to check your books, it is probably going to come down to your bank statements. But in the application itself, I do not believe you're going to have to produce very much because they want to get the money out fast and they're really big on these affirmations. I think it's going to be in the back end that they could come around and audit you and try to see the proof. But that being said, it's going to be down to what your bank asked you for. So for instance, we're talking about that accrual method. If you can show your 25 down based on accrual, you're not going to be able to show that through your bank statements because it's not going to reflect. So then you're going to have to show probably, your books to show where you're getting those numbers from. But you need to be able to back them up. But yeah, so that's a good question. I would say, obviously you have to hold on to all that information anyway, but I will be surprised if they ask you for it up front. I think they're going to make it very streamlined.
The next question, does the number of employees period you use have to be the same period as your reference period for payroll dollars?
So the number, the FTE, with the way that they look at the full-time equivalent and the employees is over the covered period. So it's that same time period that you're spending the money. So their goal is that you don't get this money and then go let people go anyway. And that's where this penalty calculation is coming from. So basically think about it as whatever period you're spending your PPP, that's the time period they're looking at. Are you keeping your employees? And they're comparing it to kind of like the period before, like, okay, you were at 10, well, now you're at 7, so we can tell you got rid of people. So those coincide for that reason.
The next question is, so we used all of our PPP 1.0 funds and have already received full forgiveness from the SBA. Our 24-week covered period was April through September, and we used it only for payroll. We want to apply for PPP 2.0. Is our covered period again when we actually receive the 2.0 loan?
Right. Yes, that's right. So the 2.0 loan covered period is going to be different.
Yes.
and it's going to be your choice, your election, but it starts when you get that second draw. Yep, that's
We
right.
want to reaffirm that you have to have spent all your PPP 1.0 funds before you apply for PPP 2.0.
Well, you either have to have spent them or you have to affirm that you will have spent them before the second round hits your bank account. So there could be somebody that's in that gray area that's pushing to get rid of less money. So I would say just keep that in mind so you don't miss out if you're qualified. Yeah.
Is the total forgiveness eligibility amount the total of my eligible costs during the cover period, or is it capped at the value of my loan?
Oh no, it's capped at the value of your loan. So the forgiveness, you only get so much money, and then either it's totally forgiven or not. So you can't get, yeah, if you spend twice as much in payroll as PPP you got, you're paying the second half of the payroll yourself. But that's a good question.
Next question. You refer to the EIDL as a loan, but then say it does not have to be repaid. Is that I think that it's only the grant part of the EIDL that's not.
Yeah, sorry, I probably went too fast over that. So the EIDL or the EIDL is the Emergency Disaster Loan Fund. This is a loan program, but it includes a grant, and the grant is minimum $1,000, maximum 10,000, and it depends on your business as to how much they'll give you, but mostly it's 1,000 by employee, up to 10,000. So what happens is you apply for this loan and you get this grant right away. And then eventually they review your loan application and say, okay, well, we'll give you the grant, but we'll also give you a loan for $30,000 or something. At that point, you can say, great, I want that loan. Or you could say, nah, just take the grant money. See ya. Either one. So it's a grant at the beginning with the option of a loan afterward. And if you take the loan part, that has to be repaid. But whatever grant they give your business at the beginning, that's yours. And it's not taxed. It's amazing. But to qualify for that loan, you also have to show a reduction. I believe it's around 25%. I don't have it right in front of me. So not everybody's eligible. You may have been eligible for PPP round 1. You might not be eligible for PPP round 2 because you can't show the reduction. Well, that's okay. That means your business is doing pretty good. So it's not the same, for all these different programs. It's not all the same rules. And if you want more information on EIDL, you can just look it up on the SBA website, and they have tons of information about it.
Can you apply for a second EIDL?
Ooh, now that's a good question. I have not heard anything about a second idol because they're still helping people who've never gotten it before. I think you would have probably had to have some kind of change in circumstances to get another loan, but not to be confusing, if the grant you got when you first applied for EIDL, if you applied like in October of this year, November, at some point, I think they completely ran out of grant money. So those people who missed out on the grant money, they can go back and say, hey, I never got my grant money. Or if you didn't get how much grant money you think you should have got, those people can go back. So they have said that because they wanted to make it fair. But just to get a whole nother EIDL loan, what I would do is follow up with who's working with you. And, if you have additional changed circumstances to say, hey, we got hit really hard last 6 months, we need a bigger EIDL loan, you may be able to get it. So I don't want to tell you can't go back. But it's going to be about changed circumstances, I think, in my opinion.
So I know that you mentioned that you can't apply for PPP if you weren't a business prior to February 15th, 2020. Is that the same for idle?
I believe, I'm not 100% sure. I don't have that right in front of me. I believe it's going to be very similar date. It could potentially be January. It could be a month earlier. I believe PPP used to be a month earlier and they moved it up. I don't know why. So it might be January of 2020, but the reason they have this requirement is because they don't want people opening a business to get EIDL, right? The point was to help people that had a disaster, not to create a disaster. That being said, I would just follow up on the EID website because I don't have all that right in front of me. So I don't want to say that you can't, but I believe there's a date that's around January of 2020.
I just want to be mindful of the time. It's 10:15 and we have like 4 or 5 more questions.
Okay.
So I understand if people have to go that they can, but we're gonna
Yeah.
keep on going and recording. So if you drop your question in the chat, we'll try to get it answered, recorded. So the next one that I have, and somebody else answered it in the chat, but you want to make sure. Do I apply for forgiveness through SBA or my bank for PPP? And I saw that the answer is that you do everything with PPP through your bank. So Tiffany, if you want to confirm that.
Yeah, that's right. Your bank, if you have a PPP loan already, should be following up with you on their process. I've heard there are some banks that still don't have it together. And one of the reasons you might not have heard from them, especially if they're a smaller, still trying to work on their actual process. Now that this simpler form is coming out, it's not just helping the people who are looking for forgiveness. It's going to help the bank. They just need to collect these forms up. I mean, they made it originally quite complicated. So I think once you see this new form come out, you should hear from your bank, but you do want to follow up with them eventually if you're not hearing from them for forgiveness.
And I think this is a follow-up to a question earlier. Is the reduction penalty quotient applied to my total eligible cost or just to the amount of the loan itself?
No, it's just applied to the amount of the loan. So once you figure out how much your penalty is, so let's say a penalty applies to you because you had to get rid of employees during your covered period. So you have like a 70% calculation. You multiply that times how much you borrowed. So it's going to reduce your forgiveness amount by that much. It doesn't involve anything else besides that.
Let me see if that makes sense. The money I reduced from the employees during the covered period. I'm not sure what that means. Do I need to pay back the difference to the employees if the reduction is not greater than 25% wage reduction?
No. So if you reduce someone's salary and it's only down 20 or even up to 25%, you're not going to hit any penalty. That was allowed. So they weren't saying you couldn't reduce. They were just saying if you reduce it past 25, you're going to have to repay some of this money. So if you figure out that, okay, I reduced their wages, they were down by 20, it's as if nothing happened, which is great. And if, just not to confuse people, but let's say you had reduced down by 30%, it's only the 5%, it's only the amount under 25 that will be part of the penalty calculation. So basically the first 25% of reduction is ignored, which is great. And just to let you know, you don't need to repay employees. I mean, it's a consideration that you could do if some kind of, repayment to them or payment to them makes sense in your financial calculation. Generally, I would say it's not going to be worth it to you to repay them so as not to repay the government. That's probably not going to be your solution. If that's what you're thinking, I would talk to somebody before you confuse your employees and things like that. So I would basically say you want to let bygones be bygones and deal with the reality of what your situation is. And you're likely to, come out the same, if not better.
The next question is, if a business is open prior to the cutoff date, like let's say November of
Mhm.
2019, what
Mhm.
is the period of sales that they refer to?
Okay, so there's very specific information on that I didn't include. And the only reason I didn't is because I couldn't include everything because I didn't want this to go on for like 2 hours. So I can provide that information to you as like an additional slide. There's information on it. It's basically a time. It's like the first couple of months your business was open or something, but I don't have the exact in front of me, so I don't want to say. So let me give that to Maria and she can share it with everybody.
Okay, so
Yeah.
I'll wait until you add it to the slides, so it's included in the slides when I send it to everyone.
Okay. Yeah.
I was approved for the idle loan round one, but was never told that there was a grant, and they are a sole proprietor.
Mm-hmm.
Isn't there like a checkbox that you have to apply to when you do the idle loan?
Well, it depends on when they applied because the grant money ran out.
Okay.
So it's not surprising that somebody, if once the grant money ran out, you probably didn't hear about it anyway. So what they're saying, because of this new law, that if you missed out on idle grant, you can now get it. Now that I don't think that means you should go make an idle application. I think it means you should go back through the channels, like through the people that emailed you originally about your loan and how you got it, and ask them, okay, how do I get my grant? Because SBA is going to be overwhelmed. You're not going to be able to get through to them. And I think a new grant application or a new idle application is going to be very confusing to them. And you have some priority because you were the first people that didn't get the grant. You're actually the first that are supposed to get it, but getting their attention might be hard. So I would say follow up with the people that emailed you from SBA about the grant, like a direct contact, and keep trying to get their attention. Maybe the SBA will come out with some kind of follow-up form for people in this category. It's just not going to be right this second because these laws just came out. They're working on everything right now. So I would say you might just have to hang in there to see how you get to make the application for that.
I have a question here. It might be a little specific, and you can just say you can talk offline. But there's a business that budgeted well, and they still have 50% of the PPP round one remaining. The staff count is steady. To the rehires that they made at the end at made end of April, they're 40 to 50% revenue under from 2019, and there's no rent relief or city tax relief coming. How should they manage the future PPP funds?
Well, this is going to be a common question for anybody that still has PPP. So first you want to look at these new categories that they opened up. So these new categories apply across the board, round one and round two. So let me go forward to the categories real quick. So when you go to spend that PPP, you can now use it for covered expenditures, property damage. So they may be able to get rid of more of it than they could before because the categories have increased. So first you want to see if you can get rid of it that way. Which basically means if you already paid suppliers, you pay yourself back from the PPP money because it was allowed. You just, you have a middle thing there. That's okay. And then as to the percentage of forgiveness, if you didn't use 60% on payroll, but you use 50%, and then you use the rest of the loan on other things, you can get it down to 0. So maybe you have to repay some of it, but you still used it. So as long as it's used up, you can now apply for the next one. So they're going to have to make provisions of how to use the first one, and you have to affirm when you go for the second one that you've used it all, or you're going to use it all before the next draw. So if you can't affirm that, you can't apply for the next one.
There's 2 questions that have to do with the hiring new staff at different salary rates. So I'm going to try to combine both of them. So they lost 8 employees prior to 2020, but brought back 6 of them, but at higher salary rates. How does that impact the loan forgiveness? And the reason that they went from 8 to 6 is because of the CDC restrictions, to focus on the pay for the new people, which is going to be higher. And had to take into consideration the CDC restriction guidelines. And it says another part of it is if you're hiring new employees for different roles and your old employees had varying pay, how do you calculate the 25% threshold?
Okay, so the 25% threshold only applies employee by employee. So if you got rid of 3 people that do billing and you hired 3 people that pack boxes, what you're looking at there is how many hours those people work. So if you got rid of 3 people that all work 40 hours and you hired 3 people that all work 40 hours, that's a wash. It doesn't matter that they do different things. It's about the hours. It's about worked hours, basically, was the increment they're looking at. So if the people come back at different rates, the rate that they're making, it doesn't really matter. It's the idea of a reduction in salary is if you keep that same person, and you reduce their salary. So if you get rid of somebody and you bring back new people at different rates, they're not looking at the rates because they're brand new. So in their opinion, it's not like you got rid of this person and now this person's up here. They're not looking at that. They're just looking at the fact that you're still offering 3 people full-time employment.
And the reduced number of people has to do with CDC restrictions?
Yeah, so this is a really good example of the penalty. So originally this person, if you had 8, let's just say early, before coronavirus, you had 8 employees. During your covered period of the loan, you only had an equivalent of 6. Well, you would have been in for a penalty, but they're going to claim the safe harbor, which says, well, there's a reason I didn't bring them back. And it's because based on, CDC guidelines, we could only have 3 people in here or whatever. So you make that affirmation in your forgiveness application. And so you're going to get a 1-page document that you fill out that says you're totally forgiven. And that's all they're going to have to do. And if somebody comes back later, they're going to get audited and they say, Lou, you were down 2 people. They'll say, hey, but I claimed the safe harbor. And that's what would happen. So you want to understand kind of like all the scenarios. I mean, I don't know the likelihood that you would get audited, but if it happened, you could potentially get a penalty. So I would say you really want to make sure, if you're just going to sign that 1 page and say we're forgiven, want to make sure you're 100% on that with like an accountant or an attorney, or you have kind of like a legal argument that you can stand behind to say it's forgiven. And if you have that, I think you're going to be fine. If you're really fishing to come up with why the safe harbor applies to you, maybe it doesn't. And maybe you should volunteer that 80% of my loan will be forgiven. And it's about risk tolerance and things like that. But ultimately, I encourage people to, be honest and only get forgiven the amount that you really allowed, because with this 1-page affirmation, it can be setting you up for a penalty later. I have no idea if that'll really happen, but I don't think you want to be the one to find out.
If you're out of the covered period to spend the money from the first round of PPP, and you still have money left, but you want to apply for a second PPP, how do you take care of that?
So you can now look at your expenditures during the original covered period and say, oh, but I spent an extra $10,000 on inventory. Well, now inventory is allowed. So you get to recalculate how much original PPP you used. Okay. So let's say you did all that and you say, I still have money left. Basically, you got to use that money. So what does that mean? If you return it, I don't think they're going to give you another draw. So if you spent it, let's just say you spent it, but it's not on covered things. What does that mean? That means you have a loan at 1% for that amount, right? So I would think that might be better and go get your second draw because you can affirm you used the whole loan. They're not making you affirm you used it on covered things. They're just making you affirm that you used it up. So that's what I would say. But if you say, well, I only wanted a amount that'll be forgiven and I don't want a loan, and you give that PPP back, I don't think I'm not sure if you're going to be able to go for the second draw. I can check on that too and make a slide for that because it's a good question. I'm not sure the answer, but I would say to use it. Try to use it on covered things from that period. And then if you have something left over, I would say just use it. Use it and make it a loan. Because then you can affirm that it's used.
This question is on the difference of business being formed and opening. So business was formed in 2020, January 2020, but didn't get to open because of COVID. Can you apply for PPP?
Yeah, that's going to be fine. So they're going to look at your formation date. And I mean, you were greatly impacted by COVID because it kept you from opening. So I'm sure that kept you from getting, receipts that you needed. So they're going to be eligible. They're going to look at your formation date. Yeah, because otherwise they're getting into the weeds of what does it mean to be open, and they're not going to do that. So they should be fine, that person.
Okay. And if anyone that's still on the call, we still have a lot of people on the call. We have 40 people on the call. If anybody still has questions, just let me know. But I think that I went through all the questions. If I missed one of your questions, also let me know. But I think we're done.
Okay, well, I know this was intense and it's a lot and it's confusing. And they keep putting out guidance and Lord knows something will change. So, if you want to do the reduced consultation, I'm happy to help anybody. And we'll be sending out these slides. And if you do have, general follow-up questions that have to do with, how the things generally work, I really do encourage you to send them because if you have it, someone else might. And I don't have everything ever in this deck. This is just what we could fit in an hour. And I'm happy to answer it and share it because we're really here to try to maximize everybody's opportunity. And that's what Maria wants you to do. And that's what I want you to do. So we really do encourage the dialogue. It's totally fine. I'm happy to keep, the lines of communication open.
So two more questions did come in.
Okay, real quick.
And I think I know the questions for the SBA loan. Should I apply to the SBA loan even though it doesn't say grant? I think that the way you can't get the grant without applying for the loan.
Yeah, so that's the EIDL, and there's only one way to apply for it. It's actually a very short application, shockingly. And it's through the SBA website, and that's exactly right. You have to apply for the whole loan, and you can get the grant and then choose whether to accept the loan. But you have to qualify, which has to do with showing you're down. I think it's 25%. But I don't have that right in front of me. Yeah.
Then what is the limit that owner employees can be paid in PPP2? Is it 100,000 amortized over however many weeks you choose? Your cover period? Is it that their 2019 income amortized over the number of weeks you choose? The limit of what employees can be paid is $100,000 amortized over the covered period, right?
Yeah. So for individuals, it's the max. So if you're work for yourself and you netted over 100,000, then the cap in figuring out how much you can borrow, you use 100,000. Otherwise, you use the net of the period you're choosing. So here's the options. You can use all of 2019. So let's say if you made more in 2019, use that. Or you can use the 1 year before the application, which is 2020. If you made more in 2020, you can use that. So pick the time period that you made the most. If you're over 100,000, you got to stop at 100. Divide that by 12, multiply by 2.5, and that's how much you can get. It really doesn't matter whether you choose, well, that's how much you can get. How much you can get forgiven is different than how much you can get. How much you can get forgiven depends on the time period you choose. So over 8-week time period, they were saying you can only get 2 months. As a 2-month time period, you could get basically 2 months of your, average. But over 24 weeks, they were allowing you to get 2.5 of your average. So any individual wants to pick 24 weeks because you get more forgiven. It's just a no-brainer. And then additionally, for if you have employees and you're calculating how much payroll, each employee is capped at 100,000. So just because you pay somebody 200, you now have to really finagle. It's not going to match your numbers on your 940 anymore because we're using their definition of payroll. So you got to cap those employees at 100. But remember, you also get to add payments that the company makes on health insurance, payments the company makes on life insurance. So that's going to increase. So it's not going to match in some instances the 940, but it is one place to start.
I put the contact info for the Chamber's website and my email in the chat. I also put Tiffany's email, council@dlcsq.com in the chat as well. Is there another email that you prefer, Tiffany, or is that the one?
Oh no, that's it.
Fine.
And I'm gonna be updating my website too with this information. It's just so new. It's not. I don't even have it up yet. And so that'll be a resource too. But it's all this information. Also, the SBA put out some guidance, but it's it's hopefully the same information you're finding everywhere. It's coming from the law, so it's public information. It's pretty much only as good as today because they can make changes, but it should be the same information you're seeing from other sources. Like I said, if anything changes, then obviously this info becomes outdated, but this is what we know right now.
Give me a second. Got another one. If your FTE, full-time employee number for the last payroll of the covered period is the same as the full-time employee FTE in the reference period payroll, but the previous other weeks of the covered period of the FTE was less than in the reference period, is there an FTE forgiveness reduction?
No, I don't think so. They're going to look at only the covered period. So it's the covered period FTE over basically like the FTE like a couple months before Corona. And I have to look for the second draw because I don't know. I don't know exactly how they're going to if they're going to keep that pre-Corona number because as we get further and further away from it, it seems kind of unfair almost to make them compare it to that. So I'm going to follow up to make sure that's still the same. They put out the new guidance, so I'll follow up with everybody on that. But it's just the covered period divided by that period that was before it, which was originally the pre-corona period of, how many people you had before all this went down. So if she had gotten rid of people, brought them back, and then got the loan, she's fine because of the covered period calculation, and just kind of got lucky with that. But yeah, so there's pros and cons to it. I swear the way they calculate it will just be a wreck for one person and like a windfall for another person, and it's sort of the luck of the draw, honestly. I had brought on an employee in 2019, but they weren't there the whole year, so I didn't get as much. And it's like, why is that fair? And I know other people were in the same position, and so not everybody's gonna get what they feel is fair, but I think it's great that everybody gets a little bit.
So the last thing I want to say is that I wanted to make sure everyone has the website for the SBA. And I'm pretty sure it might be in the slide somewhere.
Oh yeah, here I could share on my screen. Let me just see. Can you see my email screen? Or can you only
everything
see?
you're in Google? Yeah.
Okay.
I put it in the chat as yes.
So
and then /PPP.
Yeah, the thing is that hasn't officially been updated yet. But the Treasury Department put out these interim rules. So I can show you guys that real quick. Let's see here. Let's see if is it here. I just had it a minute ago. Oh, here they are. Oh, okay. Oh, I just have direct links to them. Sorry. Like for instance, I found this email. It links to the interim rules. So we could share this. This is just something I found online that had the direct links. But the SBA is going to update their website soon. Like within the next couple days, you'll go back and it'll be like, oh, round 2 PPP. But right now it's like, oh, PPP's over. And you're like, nah, no, it's not. But just keep checking the SBA site. Ultimately, the bank will give you the application when they have it ready. They still are waiting on SBA to get some things together. So the only thing you can really do right now is do that pre-application if your bank has one. So
okay. So Tiffany, thank you so much for providing all this information. If anyone does have, we will be sending out the chamber's contact info, Tiffany's contact info. We are going to try to get as many generic questions as answered as possible. But we do encourage that if you do have like something very specific, like Tiffany said, either contact your accountant or set up an appointment with Tiffany for a consultation. So that
yeah, we'll include the links to these final rules. The thing is, this is just the very first round of rules coming out. I mean, they just come out constantly and things keep changing. So ultimately just stay in touch with your accountant, your bank, and yeah, so that's about it.
and I'm sure that more information will come out and the chamber will continue to educate you. So you'll probably see Tiffany again.
Yeah.
So I hope you all have a wonderful weekend. Happy New Year once again. And thank you for joining us at the chamber. You'll get an email from us when the slides are updated and the recording has been processed. Have a great day.
Bye, guys.